everyone. I'm Rick Bensignor. Today is Tuesday, October 13th, and welcome to this week's In the Know Trader show. Up on the lineup for this week in our trader education portion, we're going to talk about just tech analysis generally. Don't be fooled by zealots and great salespeople, so we will get to that shortly. In our market overview, we'll take a look at gold again and the US dollar. And then in our sector analysis portion, we're going to look at large cap value names. So here's about a dozen or so of the names that we'll take a look at. And the reason we'll take a look at large cap value now is because these have, many of these collectively as a group have come back recently versus large cap growth. And there are definitely people out there who are looking into some of these value names. And when you take a look at the dozen names or so, you see here, they're really a broad-based name. They're not concentrated too much in one sector. So you've got value names across a bunch of sectors. And I thought it's a good idea to take a look at them. So that's what we'll do. Again, just as a reminder to sign up for my weekly ETF Tactical Trader Reports, which comes out Wednesday nights, or the new 7-Eleven monthly report, and that's the Spider Sector ETF report, which aims to outperform the S&P by being meaning invested in no more than 7 of the 11 macro Spider ETFs. That comes out at the beginning of each month. And we've already got, this started August 1st, so we've already got 3 issues out on it, and we're already outperforming the S&P. It's doing what it's meant to do. So if you're not content with just the return that you get by being in the S&P or any other kind of major benchmark, then you should be interested in our 7-Eleven report. My email address is rick@intheknowtrader.com. Thank you for the emails you get each week. 99.9% of them really enjoy the stuff we do. And if you don't, that's fine. That's what makes up anything is good and bad. And we appreciate all feedback. All right, so let's get back to or actually start with our trader education portion here. So technical analysis. Obviously, if you're listening to this show in some way, shape, or form, you like the charts, as do I. It's the basis of how I look at the market, but it's not the only way I look. And let's talk about just kind of what are some of the pros of technical analysis. Well, it certainly helps you look beyond just the fundamentals. So fundamental analysts look and study a stock, or in a macro sense, they'll look at sectors or an entire industry, or just the stock market versus the bond market, etc. So you have analysts and strategists who are out there kind of top down looking at the big picture and then get down to individual ideas. And in the fundamental world, an analyst who likes a stock at $80 a share and is recommending it, they'll also very likely be recommending it at $70 a share, and even more so at $60 a share. To a technical analyst or somebody who looks at charts, chances are if they bought something at 80, they're not going to let it go down to 60 before they've exited, because there's a reason they bought it at 80 that at the time the charts said were a good idea. If they're smart, they're also listening to fundamental analysts collectively to get a sense of what they say and how much, perhaps, let's use an example of how much upside there is to a street consensus target for that particular corporate issue. And when you get those combined, you often have a better chance of making money. So a name that has good fundamentals, that has a good place on a chart to be a buyer, gives you a better chance of making money than simply having either one alone. So technical analysis definitely helps you see beyond the fundamentals. What else can we say is that you certainly get some insights into where the psychology may flip as per the owners of a particular stock or bond, or when I say stock, it doesn't have to be a stock. It could be any of the major something in the four major asset classes of stocks, bonds, commodities, foreign exchange. We'll use stocks just as a default here. So because we understand patterns and you study technical analysis, and part of understanding market movement is what is the patterns that are made by price movement. Let's say if we see a very clear head and shoulders and a break of the head and shoulders, there's a good chance that you're going to see aggressive sellers predominate the market and push something down, simply because there's now a number of investors out there who have losing positions on. And if you take, let's just take an example of a stock that takes 8 months to make a rounding head and shoulders top. When it breaks its neckline, the prior 8 months worth of buyers are all on the wrong side as this starts breaking down. And usually that will beget other sellers coming in as people now try to minimize their losses and dish off their shares to somebody else willing to take the risk, but they want to minimize losses. So understanding technical patterns certainly is an edge over simply using fundamentals alone. And obviously there's a slew of good things that chartists can bring to the game, and hopefully that you yourselves as individual investors bring to the game in understanding price movement, market movement, and how it all fits into some overall fundamental scenario. And there's a real advantage to understanding chart patterns and price movement. At the same time, I don't want you to be fooled by the amount of advertising there is that you either receive in snail mail, email, and certainly on social media, or commercials on television that will try to tell you that technical analysis or somebody's system is the secret and the answer to the universe, and the holy grail of trading. There is none. And I counted today, let's say, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. I counted 14 different advertisements just on Facebook alone today. And I don't go to Facebook often, but plenty of people do. And I didn't even look at the other social media places, but just within 10 minutes of scrolling on Facebook, I found 14 different companies advertising their secrets to making money in the stock market. Here's some of the titles. One claims 95% winners. The best traders in the world are somewhere probably at about 60%. So claiming 95% is something that I would put in the category of these people are salespeople and probably have no credibility or reason why you should possibly listen to them. Here's one. Free chart book of 50 patterns to make you an exceptional trader. Well, it's fine to learn the patterns. You absolutely should learn the patterns. And if you don't know a bunch of different patterns like head and shoulders tops or bottoms or wedges and pennants and flags and triangles and all the things that, basic in a very basic textbook on technical analysis, or even just going online and learning, if you do a Google search of top 25 technical analysis patterns, you'll have them right in front of you. But this person is saying, here's a free chart book of 50 patterns to make you an exceptional trader. No, you don't become an exceptional trader just because you've learned the patterns. Does it help? Well, sure, you'd rather know what patterns are and what other people might be doing in the market, but it does not make you an exceptional trader. Here's one: learn 5 steps to make trading easy. And trading's very easy. Making money trading is a different story. So 5 steps to make trading easy? Sure. Hey, it's very easy. You go onto a website and you push the buy or sell button. Look how easy it is to trade. The question is, can you make money doing so? Here's one. Love this one. Their headline is, I am a 29-year-old stock trading legend. If that didn't make me burst out laughing, I don't know what will. You should be able to get a very big warning signal right away to stay away from somebody who calls themselves a 29-year-old stock trading legend. Here's one that I found interesting from a well-known company who advertises on, I know, like the major business network channels all the time. So it's now, today is October 13th, and they're willing to send you a free 2020 stock market outlook. Ooh, how wonderful. 10 months into the year, you're going to send me a free 2020 stock market outlook. A lot of good that should do me. Here's one: investing in penny stocks. Well, yeah, nobody invests in penny stocks. You trade penny stocks, and when you invest in them, you pretty much are just hoping to the good Lord above that one of these crazy things is going to work. There's a reason that the company is valued at pennies. It's because the company has no value. And you're going to waste a boatload of money trying to pick some penny stock that means something. Don't waste your time. How I turned $10,000 into $100,000. Well, frankly, I don't really care how you did it. And you've got no secrets that anybody else doesn't know who's been in the market. Can Bitcoin make you a millionaire? Sure, invest $1 million in Bitcoin and then you're a millionaire. The point here is there are a lot of people out there who will tell you, one of them is actually, I mean, I won't call him a colleague by any sense of the words, but he's in the, well, now what they call the CMT. It used to be the Market Technicians Association, now called the CMT. And he's a known technical analyst, and he sends out stuff every single day. And I'm on his distribution list. A lot of technical analysts like to send their stuff so I can see what they do. And he sends out stuff every single day about the markets. No continuous theme. Each day is something new. So over the course of the year, you're getting approximately 250 different major thought ideas from this person. You have no idea how to know which ones are strong ideas or not, because this person believes that the best thing they can do is put something in front of you every single day. And it is great marketing to do so. However, when you put out 250 unrelated ideas every year, a certain amount will work, a certain amount won't work. And chances are you're only going to bring to mind to people those that worked. And all the other ideas, which is probably 200 out of the 250 that didn't work, you don't talk about. You only bring up the good stuff. So do not be fooled by those who think and tell you that technical analysis is the answer to making money in the markets. That it's the only way to make money in the markets, that fundamental analysis is BS, and that it's all about what the charts say. Look, I've been in the camp of being, very fair to say that I've been in the camp of being a technical analyst for the bulk of my career, and Wall Street knows me as a strategist who highly incorporates charts into how they look at the markets, but it is not all I do and all I look at about the markets. And you've got to have a fundamental backdrop to what you're doing. Otherwise, the odds of something working are far less in your favor. And to me, it's all about giving yourself an edge. For those of you who subscribe to any of the In the Know Trader products, you know that I am not trying to hawk anything. What I do is provide you insights into how institutional traders are thinking, where they're buying and selling, using models that they virtually use exclusively. and are generally not in the hands of the public. And if you can get your hands on it, you have to pay a fair amount of money to do it. So it's usually beyond the reach of most people wanting to spend hundreds of dollars, if not thousands of dollars extra per month, just simply to get their hands on these models. The people who you see giving you all these trade ideas and free books and stuff, fine, accumulate all the free books you want. Don't fall for paying lots of money for people who tell you they have the secret. I'm the first to tell you, I don't have any secrets. What I do have is access to how institutional traders line up their trades and how they buy low and sell high. And I can only think of maybe 3 different ways that institutions look to put on their positions that are beyond pure fundamentals. And what I provide for you is one of the 3, and I use the other 2 myself. So I use an entire collection of institutional models to give you and provide an edge in what you do, so that the odds of making money are better than a flip of the coin. And look, most individuals lose money, and all I can suggest to you is whether you sign up for a somebody's report or not, make sure the person truly has the credibility to be saying what they are. And just because they have an advertisement and have a fancy advertisement on Facebook or a TV commercial, there are these firms out there that they call themselves day trading firms and online trading courses and places where you go for one free lesson and then you have to sign up to get the rest. These people are salespeople. They do not have true value in what they bring you. If they're teaching everybody the exact same thing, it is not going to work. So all I can say, and I've spent now almost 20 minutes doing so, is be very careful about who you subscribe to, whose stuff you pay attention to, and do they have any real value and credibility in bringing you the information they do. When you talk about being a 29-year-old stock trading legend, yeah, probably to your mother, but to nobody else in the world. And I enjoy looking at these people's stuff simply because it makes me laugh. And I feel bad for all the suckers who kind of go and buy into it, because that's all it is. They're great carnival barkers and salespeople, but don't really have what's going to make you money over time. Okay, that's our trader education portion. So now let's quickly move to the weekly comparison and sector movement compared to last week, which is on the left. So year-to-date until the last Tuesday on the left, year-to-date until last night's close on the right. Only one sector outperformed the S&P last week by more than 1%, and that was technology. You'll notice 5 sectors underperformed last week. So the bulk of the movement on the upside went to tech, and it came out of the other sectors here. Again, notably, energy down now almost 57% versus the S&P's return this year. So clearly, you can see the sectors to mostly avoid, and at some point they will snap back, but they're not proving so yet. Financials started moving up and then gave it back. As of right now, as we record, the 10-year is at 73.9 basis points. The S&P is down 13 points on the day. Oil's up 73 cents. The dollar is up 47 pips, and that is certainly affecting the metals. Gold's down $33. Copper's down just over 2 cents, and silver's down $1 as of right now. So the dollar being a major factor of what's going on. So now let's go take a look at our charts. And so we'll start with gold. So we spoke about gold last week. I told you I didn't expect it to get above 1355, the weekly conversion line. You'll see the conversion line fell slightly this week to 1937 from 1955. And sure enough, that caught the high of the week. And you can see we're trapped right now in between the cloud's weekly conversion line and the weekly baseline, right? The baseline caught the last few weekly lows. Now you're in here. You've already topped on a 13.9 count. You're in a 4 down. You'll stay a 4 this week. Next week will be the important week. In order for it to continue the down, kind of short-term down move off of the highs, you're going to need to close, not this Friday, but next Friday beneath 1866.30 for December gold. So that's kind of the important short-term type thing. If it breaks, then chances are we take out the lows that we saw at 1850. Just $15 lower is the first still active target. But this could open the door to get down towards 1800. So like I said, I didn't think that we were going to make new highs anytime soon. I do think the highs in gold are going to stay here for a while, certainly I expect through election day and possibly even through year's end. So you're going to have to get to shorter term stuff in order to figure out how to play. But basically, if you're long gold, you can still hold it. Nothing material has broken yet in a long-term sense. But if you're long gold more recently from, let's say, the breakout above 1800 that came over the summer, then you have to be much more cautious about what's going on here in the possible top. So I'd probably use these two levels in here. 1877 on the downside, 1938 on the top side. Weekly closes above or beneath are probably somewhat significant over the shorter term. Now, gold is down a fair chunk today because the dollar's up. And let's look at the dollar both on a weekly chart and then we'll look at the daily chart. And back in March, the dollar spiked up to over 102. Broke the downtrend line from, I think this one goes back to 2011, and I'm pretty sure this upper one here is from the all-time high. So it got close to the downtrend line, then started falling apart. We were able to define this low in here, both from the trend line and the setup 9 count on the weekly, and we bounced. You see, we went right back to where had been prior lows, just shy of 95, and now we've come off. But we're getting a little bounce now. So why are we getting a bounce now? Well, first, you're potentially getting a crossover here on the weekly MACD. So there's still some consolidation in here. But the other thing to pay attention to is that when we bottomed, you already had a daily 13 in place. Here's the day we actually bottomed. You didn't violate the 13. And now we rallied, sold off, and a couple days ago did a setup 9 count. And actually, I think I'm just looking at this. Oh, let's close this. Well, here, let's stretch this out. Maybe we'll be able to see. Yeah, so for those of you who know candle patterns, there is a morning star here. Big candle down, opened on the high, closed on the low. Doji day today, opened on the low, and we're not closed yet, but we're currently on the high. So morning star, good short-term bottom, all within the context of the 13, still above the trend line. So from a trading point of view, near-term bullish, and this is why you're seeing gold come off today, is both gold itself stopped at the lines we showed you it did, plus dollar strength. Okay, now we've got a few minutes left. Let's try to get to as many of these names as possible. From large cap value, so I'll try to go through these as quickly as possible. We start with Berkshire Hathaway. So you can see the 13s and the 9s pretty good here at calling some terms. Unfortunately, it didn't grab the bottom here, but we still peaked on the 9 top. You're climbing up the conversion line, sitting on it right now. So still a bullish market, but a bullish stock, but important support here. If it breaks, comes down to about 205 or so. And then beneath that, much more important support right near 195. UNH, United Health, all-time highs. We're playing now with the stop outs from these 13s, so it's hard to first, I know there's a breakout here. Most people are going to look at this as a breakout. I'll still say that you're still within the zone that these 13s are looking for exhaustion from. If I'm long, I'll stay long. but I'm probably not going to buy this the breakout here yet. It's inconclusive that this is going to keep moving up. So if you've got the name, stay with it. Verizon, trading in a range, 13 high, 13 high. Test of the stop outs of the 13 and 9 high pullback, right? But you get a good dividend on this name. So if I'm long the name, I'm still holding it as long as it's above 54. Longer term, I still like it. So I hold on to Verizon. J&J, also mostly sideways towards the upper part, so not all that far away from all-time highs. But kind of just sitting here, and probably some other names better to have than this one in the healthcare space. Don't know if we'll find them in this grouping. I'm just looking, let's see, we've got, well, Pfizer is the next one, so let's take a look. Pfizer I actually own myself. Got a weekly 13 in here recently. I don't remember why, but it was down here. Maybe it was on a daily chart. Maybe this was, let's see. Was it a daily 13 back at 32? No, I bought it in here against the propulsion exhaustion and TDST line. I bought it, I think it was this day right here, one day before the lows made. So I'm long Pfizer. I like the name. Willing to hold it. Got a 13 on a weekly since I bought it. Still in a downtrend, hasn't broken out above the trend line from all-time highs, pays a decent dividend. So one of the names I bought for myself, thinking that it was somewhat of a value type name. And again, I happen to have got it down here, just in my own account, but I'll tell you if I own something. Here's telephone. Clearly, I mean, you have a chance here, let's just say kind of triple bottom type area maybe. So in 2 weeks, you'll have a 9, a set of 9. Might be worth nibbling on 2 weeks from now, I would say. I'd probably buy a little bit. Walmart, this one I own. I've used this one as an example for a long time. I'm long from all the way back down in here. I think it bought in 2012 or 13. So I still have at least half the shares I own. Love the name, and will continue to hold this and look for something like 164 to 167 over time. Bank America on this one too. You know, financials are clearly having trouble getting out of their own way. So you've got essentially a double top in here, and double bottom long term. So here, take a look. There's essentially some type of, oops, didn't quite draw it right, but you know, there's this big rectangle and you're towards the lower end. So I don't mind holding the name as a long-term hold. Cisco. Actually, weekly 9 last week against the TDST line. I could nibble on this a little. I'd take my chances on Cisco down here. JP Morgan, don't own it. Wish it did from farther back. But again, financials having trouble, but holding on to their own. Procter & Gamble, all-time high, so all good there. And turn that off. And it says we have 30 seconds to go. I don't even have targets up here, so I'm just going to hold onto that. And last one is Exxon. And 13.9 on a weekly. If you want to do a little bottom fishing, this is similar to what I did with Chevron a few weeks ago. You take your chance, but again, this is pure bottom fishing and nothing else. That's it for this week. Hope you enjoyed the show. I'm Rick Bensignor. This has been In the Know Trader.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.